Hello traders everywhere, Adam Hewison here coming to you from the digital studios of MarketClub, and today we're looking at the stock of both Amazon, symbol AMZN, and Google, symbol GOOG. The big news there is that Amazon purchased Twitch, which is perhaps one of the leading video playing game systems in the world. Over 55 million unique visitors look at this every month. And they are one of the top rated sites in terms of traffic, the top 15 websites in the world. Amazon just purchased it for just a little bit less than $1 billion. But the reality is this is a tremendous platform for Amazon to get into the young demographics they want to get into for the future. Now look at the stock of Amazon. You can see right now the market actually is plus 100 right here. You can see a very positive side there. And this is what happened when they announced their earnings. It was right here. They missed their earnings. They've never made their earnings, so the market came down and we're coming back up now. Look at today's action. We're up about 2.6% in Amazon today, which is a lot of money, and it looks like it's going to go up and challenge this 360 level again. We believe this acquisition by Amazon is a great acquisition for them. They're just doing a lot of things very right. They're not really interested in making money, which is sounds weird for a company, but the reality is they're interested in getting more and more people into their sort of eco-Amazon system, whether it's with their Fire brand of tablets, whether it's the shopping, whether it's just the overall name. Jeff Bezos has done an excellent job. He purchased the Washington Post recently, so again, he's just doing a lot of things. He's acquiring great assets, and this Twitch, I believe, is going to be a great asset in the future. As more and more people will be watching people playing video games. Sounds crazy if you're over 40, but the reality is that's what's happening in the young market. Let's move on to Google and see what's going on there. Well, it's a very different story at Google, and as you can see, looking at the chart here, it really is a tale of two markets. Here you have a score of 50, where Amazon's plus 100. 50 means it's a trading range, means it's going nowhere. You can see right here, it's just sort of going nowhere. We've got the boundaries up here around 600 and the support around 560. But look what's happening in my mind to this market. So let's just clear the screen for a second. It looks as though potentially we're building a head and shoulders. I mean, a mini head and shoulders. This is definitely going to be the line in the sand, literally the red line, if we could call it that, at 560. Once we go through 560, this market could accelerate on the downside. It seems to me that Google has lost a little bit of its mojo, and I think we could see more people moving into Amazon because they think it's got more growth potential. Certainly it's selling a lot of things. In fact, I just joined Prime this month, which is one of their leading services for free shipping. That's just going to add for me to buy more things on Amazon, which is my go-to place right now, pretty much. So here's what we see. We see maybe Google's losing its mojo, not a bad thing, but the reality is the longer-term trend is right here, and that's still positive for Google. So please don't misunderstand what I'm saying. I'm just saying the intermediate trend, which is right here, is slightly negative, and we're in a trading range, indicating we could potentially go down to the 560 level before we pop up again. Closing below 560 to me would not be a good sign. We would be looking for a move down to probably the 520 level, which is what this head and shoulders formation would give you, which takes you back to this support area right here. So that's our look at Google and Amazon. We like Amazon. Google, not so much. Hey, Adam Hewison here. Have a great trading day. Thanks for watching.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.